With the worldwide resources of Dow Jones, this is EBN.
Good morning. If you just joined us, welcome to Daybreak here on European Business News. It's now 8 o'clock Central European Time. I'm Teymoor Nabili.
And I'm Becky Anderson. We'll cross to our sister channel, Asia Business News, in a few moments to talk to Philip Chan. But first, our main stories this morning.
Well, it's time now to go to our sister channel, Asia Business News, this morning for our usual roundup of what's driving the economic markets over in Asia. This morning we are joined by Philip Chan of Shanghai Hong Kong International Securities. Morning, Philip.
Good morning. Good morning.
Thanks for joining us again this morning. Let me just ask you quickly about the perennial question, and that is Hong Kong sentiment. We'll start off with the Hong Kong market. Now, we've seen a bit of a fall today, but what I wanted to know was, given the jailing of the famous dissident Wei Zhensheng yesterday, how is sentiment in Hong Kong this morning, and is that playing in the markets at all?
Yeah, the jailing of the dissident, yeah, I mean, it's obviously not good news, but it's had no real effect on Hong Kong today. The market is actually down a little bit today, but what's driving the market here is the outlook for interest rates in the U.S. Coming up, and also how that's going to, or even if there's no change, say next week, then is it going to change in January at the next meeting?
Well, there was a time that things like this Wei case would have had a fairly significant effect on the sentiment in Hong Kong. Is that now not the case? Yeah,
that's true. I think that Hong Kong is, by and large, has become fairly desensitized to the say political happenings in China, bar sort of obviously major things to do with, say, broad policy or the State Council, whatever, or major leaders. But these kinds of cases with the Wei dissident are not really affecting the market anymore. But that's what we've been seeing. Yeah.
There is surely likely to be a little bit of fallout from this, because there are, as ever, people in the United States, many of the human rights activists, who will and have been causing a big fuss over cases just like this. And the more they do this, obviously, the more chance there is that next time the most favored nation trade status issue comes round, as it does every year, there's going to be even more pressure on the U.S. government to try and do something about the human rights record in China. And that, of course, will affect Hong Kong.
That's true. That's true. But in terms of trade, you know, one thing which the U.S. has managed to separate from is trade relations. And okay, they have tried to sort of partially link it in the past, but to no avail. So I think it's unlikely that even pressure from lobbyists is going to have any effect on the say the trade relationship with China, because in the end they've always stuck with say policies which they've had for some time.
All right. Well, let's
between China and the U.S. I mean.
Okay, Philip, let's leave the politics angle aside for just a second then and talk about the market itself. Now, as you said, interest rate cuts, or the possibility of interest rate cuts, is the important issue at the moment, both in the US and in Hong Kong. But nonetheless, despite the most sentiment that an interest rate cut is on the cards, the Hang Seng Index is having a lot of trouble breaking through the 10,000 point mark. Now, what's holding it back?
Unfortunately, unless you have an interest rate cut, there's not real sort of groundbreaking news happening in Hong Kong, which is going to pull a lot of foreign investors back in, because earnings growth, for general corporate earnings growth for next year for the Hang Seng companies is going to be single digits, right? And that's not enough to pull them in. So if you have a major cut in interest rates, or maybe staged over the next few months, gradually bringing it down meaningfully, then I think you would get some money coming in from foreign institutions. But now, see, the thought is that they're not going to cut rates next week, so that's why the market's been soft in the last few days.
If they do cut rates, and given the traditional New Year rally that we do see in the Hong Kong market, could we see a 10,000 plus level?
I think so, yeah. I mean, I don't think it's more of a psychological barrier than anything else, and I think it can break through quite easily. Whether it sustains a meaningful rally is another matter. I don't think it's going to be a major rally. You know, I think you would see a rally in the first quarter, but then you would see you know, the quieter time in the middle months. As I said, simply because of corporate earnings growth is slower next year.
Okay, let's talk about a couple of points in China economics-wise. A trade surplus of 30% lower next year is the forecast at the moment. How likely do you think that is, and what will its effect be?
I think it's quite likely. In fact, some brokers, some economists are actually looking for a bigger cut than 30%. I think it is quite likely because the VAT rebates which the government was giving earlier this year were cut, and they were cut across the board. But you had a rush of exports in the first half of the year to beat that deadline because the cuts were announced in July. And since then we've been seeing exports falling off, you know, from China. And there is the possibility now that imports are going to increase because of the proposed cut in tariffs, although we haven't seen the items. So, I think the trade surplus is going to decline quite substantially next year.
Okay, Philip, I'm afraid we're going to have to leave it there. I'm told our satellite's about to go down, but thanks for joining us this morning. Okay, thanks.
UK business leaders are strongly in favour of a single European currency, with just 11% against the idea. The report by Anderson Consulting comes ahead of the EU meeting in Madrid this weekend. Leaders are hoping they will be able to agree a way to launch a single currency scheduled to come into effect in 1999.
The leaders